Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, September 25th, 2023. Before I click through all the charts, as usual, just want to ask you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Apple report. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as 2 individual stock picks a week, 5 to 10 minute video format just like this that you never see on YouTube, that cater to the 3 to 5 week swing trader, out to the 3 to 5 month near term investor, always looking for 20% moves on those stock picks. And you get a 5-day free trial up front. So you can check out everything that I just mentioned, including all of our recent stock picks and those that will occur through this week that have yet to be shown for free. You've got 5 days to check it out. If you don't like what you see after 5 days, you can bow out at no cost to you whatsoever. So on with the charts. Just a big picture reminder that still constructive well into next year above 167.83. Yes, we're in sort of a near to midterm weakness dynamic, rotational southbound rotation. But bottom picking still below the market at 167.83 through, really, I'm going to say through next year, because from here we can rotate up into the 220s and climbing by this point next year or sooner. This was a long-term buy signal that occurred 4 or 5 months ago in May when we settled above the 167.83 formation. And if we do happen to test it, it really is a zone that is unfortunately widening ever so gradually, but that doesn't mean much for you big picture traders who trade 3 to 5 week, 3 to 5 month swings. 164.93 is the backstop against 167.83. This is an area that really also begins at 169.94. I don't want to throw all these numbers because they're all kind of opening up and spreading apart now. But if we do close the week clearly below 167.83, then this 164.93 gets reduced in significance. But on an intra-week basis, we can break 167.83, even close below it, test 164.93, and if on Friday we then still close above the 167.83 formation, it remains stay long for the long haul. Get long or stay long for the long haul, as long as we continue mustering weekly settlements at or above that 167.83 formation. So let's take a look kind of at the near-term outlook. You're familiar with this channel structure that still exists at 180.38. We might see that today if we can push above 177.46, which is nothing more than a 5/8 Fibonacci over the last 3-day extremes. If we push through 177.46, 180.38 in reach. Until then, 177.46 is a decent day trade level for aggressive day traders. Downside, we've got 173. 64, and that is nothing more than, I don't have it labeled here, but that horizontal trend line off these lows is 173.64. It can contain intraday selling. From here, we can rally up to 177.46. 177.46, we could trade inside of this area for a good part of the day. If we break or open below 173.46, then I think you should expect an intraday test of 171.96. This actually shows it well right here. I could have labeled that. We forgot to. 173.64, able to contain intraday weakness if we break or open below it. 171.96, the August low in reach today, where we can double bottom for the day, potentially into later week. I will say closing below 171.96, no good reason to be long overnight unless you're a big picture trader, because then I would expect this 167.83 area within 3 to 5 days. By the end of the week, we could test that 167.83 level down to 164.93. So if you're a 3 to 5 day swing trader, I wouldn't be long below 171.96 into tomorrow. If we close today below 171.96, if you're a 3 to 5 day swing trader, you may actually consider playing the short side down to 167.83. 167.83, once again, the start of a wide zone of long-term support down to 164.93, able to contain selling not only through October, but perhaps through all of next year. Let's talk upside. I'll go back to this chart that if we push through 177.46 today and test 180.38, it can contain weekly buying pressures. And unless we can close above this formation in the coming days or the next week or two, selling pressures can continue to build. Sellers remain in control right now below 180.38 as we move into October trade. This long-term support in the 164.93 to 167.83 area still in reach over the next 2 to 3 weeks or less. And if we do close above 180.38, I think that's a long shot today, but if over the next few days we do, I see a good low through October. No good reason to be short this market over the 3 to 5 day and 2 to 3 week time horizons. And in fact, you want to be long over those time horizons if we close above 180.38. Then anticipating the 191.16 formation within 2 to 3 weeks, where we can top out on a weekly, possibly through October and into November basis. We could then sort of trade inside of this for some time. It would be a settlement, just big picture, above 191.16 that would set off a long-term buy signal over the following 2 to 3 months to 211.23. So I'm just kind of giving the big picture. As we approach, assuming we do, I'm not sure we will, but as I mentioned before, holding below 180.38 will keep long-term support here. So as we approach, if we approach the mid to upper 160s long-term support, and if you're a big picture trader and you like trading options, you may scout around for anywhere from, and I'll go back to this chart, 210, 215 out of the money calls that don't expire for at least, I would go a year out on this. I think this could be the better part of 3 to 5 months before we could then pull off and head up and out. You might not reach for those out of the money calls unless we were to close above 191.16 in the coming weeks. That is sort of your buy signal into later year. But as we're testing, if we're testing the mid to upper 160s, you may also anticipate this 227.68 formation by this point next year. So what does that mean? You're buying, 225, 235 out of the money calls that don't expire for at least a couple of years. So, I don't know if that's something you are comfortable doing. But I don't like buying options that are that far out. Now we are talking longer term time decay if we just sit here and do nothing. But I think I've pretty much covered it for the day. I am going to leave it at that for Monday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. I'll talk to you tomorrow with Tuesday's Apple.